Whenever technology shifts happen, you have opportunity to create new products, new platforms, new business models.
How big a setback it was when the Reserve Bank of India took action on you?
Some things work, some things don't work. I think that's okay. The system is very slow to respond to any issue that happens in the country.
Very good evening. It's always a pleasure to have a fireside chat with a person, a very young person. And this is a tradition that business standards BFSI summits have almost had. Last year we had, if I remember, Mr. Sameer Nigam, and I had the privilege of doing that interaction as well. Shashank, if I may call you by your first name, please call me AKB, as I said, is a young man of 33. I will tell you a story about him, you know. The story is quite interesting about, you know, in Hindi it's called Yug, you know. About 12 years ago, a young man had finished his graduation in engineering and decided to work for, at that time, one of the world's biggest IT company. And he went to Redmond in the US and worked for Microsoft. But 2 years later, he came back, and exactly around the month when Mr. Narendra Modi was forming his government in New Delhi, Shashank was planning with his colleague to found a new fintech platform that will change the way people make payments. And in the next 10 years, he would increase his reach, increase his valuation to the point that Hurun Rich List treats him as it's one of the youngest billionaires. So please welcome Mr. Shashank Kumar. My first question to you, Shashank, before whatever you wanted to say, nice things about me, is that how did this idea of Razorpay come about? And a second supplementary, you know, journalists like to ask supplementaries all the time. So they're not happy with one question, they're happy with 1.5 questions. So first, how did this idea strike you? And the second is, why did you call it Razorpay? What does it mean and why? Please, all yours.
Thanks a lot for that very generous intro. Right? And I just learned just 5 minutes ago that Business Standard has finished 50 years. So
Yeah.
really, big congratulations on that.
Thank you.
Okay. Now talking about Razorpay, you know, 10 years ago,
Yeah.
right? You know, I believe a lot in technology shifts. Whenever technology changes, right? Whenever technology shifts happen, you have opportunity to create new products, new platforms, new business models, which are till then not even possible. And it's very difficult for incumbents to imagine. Of course, all of that is in hindsight. That time we were very young, 23 years old, and we were very naive. But I think naivety is a good thing, sometimes at least in this case, when starting a new company, not knowing how tough it is to start a fintech company, I think turned out to be a very good thing. Because when we started, we wanted to solve for payments. And that was a problem that we ourselves suffered. Because me and my co-founder Harshil, we used to hack around things a lot. We would build few stuff and put it out. And for one of those things, we wanted to accept payments, digital payments. I think we had a fairly bad experience with the incumbents. You know, a lot of the banks ask questions like, are you profitable? Are you operational? Do you have funding? And we had none of those things. So we felt at that point that mobile penetration will increase remarkably, significantly. Internet penetration will increase. And I think there was a startup wave afoot, right? Flipkart was already very big. We thought like startup ecosystem will grow 100,000 times in the coming years. So we felt that you need a modern payments product platform for technology-focused businesses in the country, free from all the older mindset, right? And build more for the modern mobile world. And that's what we went and started. Uh, of course, we never imagined how big it can be, right? And how disruptive it can be. So all of that happened later. I think coming to the name Razorpay, right? I'll tell you two answers, and you can tell me which one is true. So I think one reason.
I think you are being very quizzical. Please go ahead.
So one reason was that as the story goes, all the banks and financial companies, by default, they are built with the mindset to inspire a lot of trust. Because you are handling people's money, right? So you have to establish trust as the cornerstone of the relationship when dealing with customers. I think that is very important, right? But most of the financial institutions go after trust as a primary theme. We wanted to go after the theme of innovation and agility. That we'll build the best products, we'll innovate, we'll be the fastest, we'll be the most innovative. And I think the name Razorpay denoted by the name itself, like agility, speed, sharpness. So it was a bet against the incumbent mindset, right, and to stand out. So that's one reason. I think the second reason is that the domain name was available.
Okay. No, tell me, this was a thought process that you and your founder colleague worked on, or did you employ an agency?
Oh, no. I don't think we had any kind of money to employ any agency.
So you did it yourself?
Yeah, of course, yeah.
Okay. This subject today we are discussing is both resilience and innovation. Now, clearly, you showed innovation even in the way you name your company. But in the last 10 years, a lot of you may not fully be aware that Razorpay actually is probably set a record in a different field. In the last 10 years, it has acquired 8 companies. So in other words, almost every year it was acquiring a company. And then today its market share is 42% or something around that. Now, how do you connect this, your desire to acquire companies, grow organically, and build it in the overall fabric of resilience and innovation? I mean, or is it happening in a very natural, normal way, or is it all planned? Because I cannot recall a company, a unicorn, that acquires 8 companies in 10 years, has a market share of 42%, and is actually almost close to becoming a decacorn. Or are you already a decacorn? Not yet. And you are earning profit. You are a profitable company. So what is this secret sauce that you have which allows you to be resilient, innovative, and yet keep acquiring and growing?
It's difficult to explain, but I think the secret sauce is the culture and DNA that we have, right? The company is very much bottoms up, if I can say that. Most companies are run very top down, and which is okay, right? I think at Razorpay, the company is actually run by a bunch of leaders. We say that internally we have 50 different teams which are running after their goals, and we discuss with them what the goals are for the year, but they decide the strategy, they decide the roadmap, the execution plan, everything. And that's what allows us to run very fast, launch new products every quarter. And I track that as a metric, like how many new launches we are doing every quarter, right?
New launches of
New features, new products
features.
for the customers that are there. Because if that innovation engine stops, then I think that will be really worrisome for me. Some things work, some things don't work. I think that's okay. But running that innovation engine with the culture that we have, with the processes that we have, with the people that we have, I think that's very, very important for us. And that's the secret sauce that we have. And coming to the acquisitions, see, I think doing acquisitions is not a big deal. You have a lot of other, startups which have done so many acquisitions, and some of them have failed because of doing acquisitions, right? I think what is equally important is how do you absorb those acquisitions and how do you make them successful. So I think we care a lot about the kind of companies that we acquire, about how we integrate them with the mothership in a way, right? And how we put efforts with the acquired entities, with the people, to make them comfortable and to make them successful. Because just doing acquisition is not so difficult, if I can say that, right? If you have capital, equity, you can do acquisitions. In fact, the tougher thing is to work hard in integrating those entities and making the acquisition successful. So I would say like we care deeply about making the acquisition successful as well, more than an average company. And that is how, the innovation is not just organic. We don't have a monopoly on innovation, right? The innovation can happen anywhere in the country. We have a lot of amazing entrepreneurs. But not all of them are able to raise capital. Not all of them are able to achieve escape velocity. And that's where we can help. Like if we see an amazing innovation, amazing team, then there's then there's a lot of alignment that, yeah, let's go and try this thing and see how it works out. And it gives us a superpower which other companies may not have.
And how do you acquire that resilience?
I think over 10 years, you learn few things on how to build that, because I don't think the resilience part came in when we started, right? But when you go through a series of setbacks, when you go through different kind of experiences, the institution itself acquires a lot of imprints on how to be resilient, right? Because I think we have suffered a lot of setbacks. It's not that we haven't. But if we are able to survive those, then I think there has to be a lot of learnings from those setbacks as well.
Okay.
Where I think a lot of institutions fail is that they don't incorporate those learnings.
Yeah, I will come to the setbacks later. Let me ask you that when you acquire a company, and that company in almost all your cases were also a startup. So here was a case that a newly set up startup, which is fairly large and ambitious, innovative, is acquiring other startups which are also claiming to be innovative and ambitious. Wasn't culture a big issue there, or did you have a problem in absorbing them or making them adapt to your culture? How difficult was that process?
I think it's the other way around, right? I mean, we would rather acquire innovative and ambitious companies than the non-innovative ones, right? Because if those are startups which are already having that kind of culture, which is similar to ours, it's much easier to, come together. It's very difficult if we are trying to acquire traditional companies which don't operate the same way. So in fact, that's one of the selection criteria for us, that whether we can, we have people in those companies which can operate at the same pace with the same mindset that we have. Because if they are far off from it, I don't think that marriage will ever work.
Okay. Coming to setbacks, how big a setback it was when the Reserve Bank of India took action on you? Can you take this audience into this process? Because we have seen many big financial entities completely sort of buckle under the pressure when an entity like Reserve Bank of India comes and takes some action. You went through a bad time. How did you go about it? Are there any learnings that you would like to share? And what were the ways that you came on top of that?
Yeah, I think the company matured significantly in the last few years, even before the RBI embargo came through, right? See, I think as a fintech, right? I mean, as a startup, I think you are trying to grow fast, right? And coming from a non-financial background, I think you're trying to change the world, building products, solving for customer pain points. I think those are the DNA that we have, right? Those are the DNA that we had and we have today, okay? And I think for the regulator, what also equally matters is that how are you ensuring the overall safety of the ecosystem, right? And I would say that, before becoming regulated, right? I would say that we have this thought process that, hey, we are operating in an ecosystem of a lot of banks. Like we work with a lot of banks, right? We are not directly regulated. So we are working in an ecosystem which is prioritizing safety already, right? I mean, whether it's the regulator or the different banks that are there. But I think one major learning for us in the last few years has been that, whatever business that we are doing, right? We have to go the extra mile and ensure that the companies that we are dealing with, the people that we are dealing with, they also have the right intention when using our platform. Because ultimately we are a conduit for moving money from point A to point B, right? From bank account A to bank account B.
You're making money move simply.
Yes. So if bank account A is kosher, if bank account B is fine, then we are not supposed to apply a lot of intelligence in that pipe. At least that was our thought process, which I think changed. Which is that if any business is moving through our pipes, then we have to go deeper and verify the authenticity of that business, the intention of that business, right? The source and the destination. So, and I think that was a learning that we incorporated over the last few years. And that's something that we have now incorporated in our DNA.
Okay.
And for the rightful reasons. I would tell you why. Because the system is very slow to respond to any issue that happens in the country. Okay. Any kind of fraud, any kind of scams that happen, right? We are very, like the process downstream to recover from those or to punish the people who do that is not great at all compared to more developed countries, right? So, the legal system and the law enforcement, all of that I think takes significant lag. So I think for the regulator and increasingly so for the industry, what is more possible in today's infrastructure and for the country is to stop it from happening.
Preventive measures.
Preventive measures, right? So while those preventive measures may feel more painful, may feel sometimes that you are going overboard, right? And in that process, you might sometimes stop some genuine business as well, right? But I think in a country like India, preventive measures are what have been working and will work. So you need to go with what is working rather than trying to fix the system, which is not in your control. Okay. I think that's the attitude that's the philosophy with which I think both the regulator and the industry needs to operate.
Well, let me try to provoke you. You are a really cool person. So a lot of people say, and we in the media industry also often say that regulation kills innovation. Do you believe that regulation kills innovation? And in your case, was regulation trying to stifle innovative growth? Or was it something that what you said was regulation was trying to make the money passage safe? A lot of people, I remember in the 1990s, the big IT growth in India was attributed to the absence of government in the IT sector. So government was not there, regulation was not there, it grew with great innovation, great unrestraint. So what's your sense, although you have gone through RBI regulation and you seem to be comfortable with the regulation, what's your sense?
See, I think that blanket statement that regulation kills innovation is definitely wrong.
Okay.
I can agree with that bad regulation kills innovation or over-regulation kills innovation, right? But I think in a financial services industry, regulation is needed for innovation to thrive also.
Okay.
Otherwise, you will get a wild, wild west. And we have seen that in countries, in more developed countries, right, where you have had multiple crypto scams, multiple financial scams, bank runs, bank failures. See, a developed country like US can absorb that because it has a very mature industry, very rich ecosystem. I don't think a developing economy like India, where people are still not in the formal financial economy, can absorb those shocks.
But let me try my luck a little more.
Yeah, go ahead.
But if there is innovation, and innovation is comes under the glare of regulation, and it is also said that technology often outpaces the speed of regulation.
Yes.
So, does regulation really help, or regulation is actually all about catch up? And therefore, all it can do is something has gone wrong, and therefore innovation is constrained as a result. So, is that something that makes sense to you?
I think it's a bit of both. Regulation also enables innovation, right? If you look at UPI, for example, I don't think it came in a vacuum.
Yeah.
I think all of us are really proud of UPI, right? But you have to give credit where it's due, that the regulator has a huge role, significant role, in not just fostering UPI, but shepherding it such that it reaches the masses.
Okay.
Right? At the same time, what you said is also correct, that technology does outpace regulation. That's how it should be.
Yeah.
And regulation has to play catch up in those areas as well, right? So there is some intentional regulatory innovation, which I can say, which is how do you promote financial inclusion? How do you promote payments? How do you promote banking? These are some very intentional goals that the regulator in the country has. I think they keep thinking about it and keep taking deliberate actions to promote these goals.
Yeah.
Right? But at the same time, there are some technology, innovation that happens by itself, which is things like AI, for example, the boom in personal credit, right? A new, sort of like neo-banking, BNPL, where probably the regulator has to catch up.
Okay. Okay.
And figure out how to balance innovation as well as things going bad.
Okay, before I come back to my supplementary, let me say that we will have some time for some questions from the audience. So if the mic is readily available, so just keep it ready. So my supplementary to that was, do you think RBI is a right regulatory body, or do you think for a fintech platform like yours and your other competitive players, there's need for a far more localized and focused fintech regulator, which need not necessarily be part of RBI? It can be something else, or it should be an extension of RBI. Like, NABARD was created out of RBI to regulate something else. Now, is that something that has been discussed in your sector? I think our role of RBI in that sense. We had the RBI governor in the morning. Let me tell you.
Yeah. You can't have separate regulation for financial services and fintech, if I can say that, right? At the end of the day, fintech is a segment within the broader financial services industry, and probably its future as well. Maybe like 20, 30 years from now, fintech is what every company needs to be, whether they like it or not, whether they are a 100-year incumbent or a 10-year startup, right? So you can never have separate regulations for fintech versus for financial services. They have to be one and same. Right. So that way, I don't think you can have a separate regulatory body. It has to be. It has to be RBI.
Okay, fine. If there are any questions, please raise your hands. If there are no questions, then I will come back with my own. Is there a question? Yeah, please go ahead.
How do you?
Please identify yourself.
Sorry. Yeah, I'm Urvanki. And I would have a specific question.
Yeah.
How do you differentiate yourself? Because these days, banks do face competition from fintech, and it's vice versa. So how do you want to make it differentiated, or you want a collaborative thing? What's your views on that? Thanks.
See, I think one major difference, right, between banks and uh, fintechs, right, is the ability to build software, ability to build technology. That is a very major fundamental difference just in the way the DNA of the two different set of organizations, right? Uh, you know, and and that is why you would see that payments, for example, right, it has become a very much software-oriented space. You still have regulations, you still have all the pipes, you're still moving money from point A to point B, but it's heavily being done by new age software, right? And that's why you would see that, banks now are providing the infrastructure, banking infrastructure, because at the end of the day, that's the base for the country. But all the software on top of it, at least for payments, whether it is for UPI payments or merchant payments or anything else, right, is being done by fintechs. And that's the collaboration that has worked out really well. So you'd see that more and more in whichever banking domain, if software starts playing a major role, then either banks need to change their DNA or they will cede that space more and more to software companies, right? And in the domains where software doesn't play a major role, especially let's say things like lending, for example, because at the end of the day, lending is all about managing your risk. You would see that a more traditional NBFC or bank which does that job really well will thrive.
Yeah. Next question.
Hi, this is Jayesh Shah. My question is, will payment business ever be profitable on its own? I really don't know your model, but from whatever fintech companies that we have seen, they make money out of loan origination and all the other services. And you have competition like UPI and others, so you're not able to charge really for the payments. Thank you.
Yeah, I think. See, I think payment companies will make money. I don't think that itself, is unproven at this point, right? Our payments business is profitable. Okay. And there are other payment companies as well in the country which are either profitable or close to profitability.
They are not subsidized?
They are slightly subsidized, but subsidized covers for the losses, which is the second point that the government, right? I mean, in a way, needs to let it run as a free market, right? Where the subsidy itself that is present is directed towards the right segments of the society. There is no point in subsidizing the large MNCs and corporates because they can pay very well for the cost of the payments infrastructure as well as the innovation that happens on top of it, right? So yeah, while the payments company will make money, I don't think that is in question. I think there can be a bit more done for the innovation to happen in the free market.
Yeah. Just two more questions and then we'll come back.
Hello.
Yeah, go ahead.
Good evening. First of all, Shashank, you are an inspiration to all the young people. So keep the good work. Yeah. My question is, India is at the forefront or the leader in terms of digital payment. So how do you see the digital payment infrastructure or everything evolving in the future with the emergence of, let's say, CBDC, as it was discussed by RBI governor in the morning, and all the other AI related or cryptocurrency? How do you see the landscape evolving in the future? Thank you.
Let me add to his question. That was also a question I thought I would ask you at the end. Both the digital currency and artificial intelligence are going to be disruptive elements. Do you think? Do you agree with that? Yeah. And what's your view? Yeah.
Yeah. See, I'll give you a bit of a history, because sometimes we probably don't realize like how far we have come, right? When we started Razorpay in 2015, I think a lot of VCs used to tell us we are late to the market.
Oh, really?
Yeah, yeah.
Oh.
It's tens of VCs, not just one or two, right? Because they believe, we don't have as much capital. We are already late to the game, right? There are already a lot of incumbents as well as, large new age startups which are working on payments, right? That time in 2015, the digital payments market, online digital payments market was $60 billion. Today, Razorpay itself processes more than $150 billion, right? And the market itself is more than $500 billion of throughput today, right? All thanks to UPI and Geo and obviously the lucky breaks that the industry caught in between. So much innovation that happened. Now, if you talk about next 10 years, right? In UPI today, we have about 300 to 350 million people who are transacting digital payments. So let me show you like 3 major things that will happen in next 10 years. I think the population that is doing digital payments will grow from 300, 350 to 1 billion plus, right? So clear 3 to 4x growth in next 10 years. The economy will grow from 3.5 to probably 10 trillion in next 10 years. And the third thing is that the average income is rising, right? So, the number of use cases or the conversion of unorganized to organized economy will continue happening. So digital payments itself will still grow 10 times from here and maybe more. So that 500 billion will probably become more than $5 trillion of digital payments. And that is a massive change. That is a massive increase. And all of that will be underpinned by the revolution that will happen in AI. Some of it will happen by CBDC. Some of it will happen in, making credit easier on UPI. So these are the technology trends. But this is what will be the reality in 10 years from now. So now if you know that reality, then why won't you go and take massive bets on innovation and seeing how you can enable that change and how you can be part of that change instead of being on the sidelines?
Thank you.
Wonderful. Thank you. I think we have run out of time. Can it be a brief question? Just a brief question. Quickly. Where is the mic?
Oh, I have the mic here.
Yeah. Sorry,
Hi.
go ahead.
Yeah, I'm Nivedita from Business Standard. Just adding to the question that you already answered, that RBI should be the regulator for fintech as well, because there can't be 2 regulators. But I wanted to ask you if there is a mismatch between the industry's aspiration, the fintech industry's aspiration, and how you are being regulated, and what can be done about that?
Yeah. Good question. I think, I do think about this fair bit, right? I'll tell you something. I think fintech industry is, probably 10 years old, right? Most of the major fintechs came around, in 2010 to 17, 18 period, right? And RBI as an institution is probably closer to 100 years.
90 years.
Yeah. So almost a century, right? One or touch. So of course there's going to be mismatch in, the philosophy of the industry versus the regulator. I don't think either of them are wrong. It needs to, come together somewhere. I would honestly say after being in the industry for 10 years that I think RBI has more long-term view, or rather more broader view of the country, right? As much as I would like to believe that, the industry is doing great work, and it does. But we are still not touching the real India. And it is true that technology can really outpace regulation. So while the benefits that it brings is really big, if it goes wrong, the harms that it brings is equally big. And as I said before, in a country like India, prevention is better than cure, right? So you have to stop things going wrong before they happen. And that is where that fundamental mismatch occurs. Because the industry always wants to run faster and believes that it is always doing the right thing, while the regulator will always be moderating that growth. And technology has fundamentally changed that in a big way. Because 20 years ago, any kind of innovation will probably take years to reach 1 million people or 10 million people. Probably take a decade to reach, more than 10 million people, right? Today with technology, you can reach 10 million people in less than a year. And I don't think any of us understand what a product reaching 10 million people means, especially if it goes wrong. And that is why the regulator has become more proactive. Because earlier, the innovations used to take much longer to reach people. Now, I think it's become much faster. So even the regulator has to respond a lot more fast before they see things scaling up. So in that sense, I do think the regulator has the right intention, and it's their job to be proactive in some of these areas. But I think having said that, what might help, create a lot more comfort is to have a bit more transparency in what their philosophy is and how some of these decisions are taken. And that is for the regulator to think about, right? Can they create dashboards around compliance? Can they publish more reports leading to some of the actions that happen? Because that will then create a lot more comfort and also a lot more guidance for the industry, rather than just the guidelines and the actions that happen, right? Because I think in private, those deliberations do happen, but I think as a broader industry, there can be a bit more transparency, and that will then make it easier for the industry and for the regulator to be on the same page.
Okay, I think we have to come to the end of this discussion, but I will not, I'm sorry, we have to close it because I'm looking at Ridhima, but I will be killed alive outside if I don't ask this question to you, which is that will 2025 see Razorpay go public with an initial public offer?
Absolutely not.
Absolutely not. You are denying it.
Yeah.
Okay.
No, because we are still in the process of reverse flipping the company from US to India, and being a regulated entity and all the associated compliances and processes that come with it. I think that process itself will probably finish sometime in 2025.
Okay. So 2026.
So, see, we have certain internal milestones.
Okay.
For the company, especially for the new businesses that we have. Because I think the online payments business for us is profitable and having a lot of predictability. But for the new businesses that we have, which is around offline payments or the financial services, financial software business that we have, I think we are still investing a lot in that, aiming for significant growth in those. And I think we want some of those businesses to mature. So probably beyond 26 is what I would say.
Thank you very much, Shashank, and please give him a big vote of thanks, and thank you for being very patient, very kind in answering all our questions. Some questions that I tried to probe deep into, but you sort of handled it very well. Thank you very much.
Thanks a lot. And again, many congratulations on finishing 50 years. That's a significant milestone.
Thank you. Thank you very much. Thank you.